Okay, everyone, let's continue with our second session here at FinTech LIVE London 2024, and it's our first fireside of the day. I'm delighted to welcome Gareth Wilson, Executive Vice President at Capgemini. A warm welcome for Gareth, please.
Thank you.
Right, good morning, good morning. How are you, sir?
I'm very well, thank you, Neil. Very well, good to be here on a Tuesday morning.
Absolutely. I was off half of last week, so I'm still not quite sure what day it is, so please excuse me for that. Right, so we're talking how to lead in the open and instant future of payments. I'm going to ask you the broadest of broad questions to begin with, and that's by looking backwards, because we're spending a lot of the time looking forwards over the next 2 days. So let's summarise the last decade, if you will. How do you see things? How have they changed in banking and payments industry? Give us a running tour through that decade.
Oh, well, obviously, Neil, I think we would say there's been a dramatic transformation in the world of payments. I think we would view this probably through a customer lens, first and foremost. I think we've all become very comfortable with the kind of digital world. We've all become very comfortable with sharing our data. We've been comfortable with operating in a very kind of personalized mode. And I think from a financial services perspective and specifically a payments perspective, the industry has had to respond on that basis. I think in addition to that, Neil, we've seen regulation. It's always a feature of every financial services and banking conversation, and I think the regulation has clearly driven the development of faster payments, for example. And thinking about faster payments or instant payments here in the UK, we're going back to 2008, so we're going beyond the 10-year horizon that you gave me.
Yeah, I'll allow that on this occasion.
Thank you very much. But obviously, and open banking likewise. The provision and access of data through third parties enables us to innovate and create different use cases and different customer propositions. Again, a good example we see here in the UK is HMRC, for example. Over 1 million self-assessment payments are now paid through an open banking API. So regulation, I think customer expectations, I think the investment in technology, again, for all of the bank executives in the room, for all of the FinTechs here, for all the technology companies, we've seen a significant increase in terms of investment in digital transformation. I think at the last count, something like £12 billion a year is invested by the UK banks in terms of that digital transformation. And then I think probably the final aspect I would touch upon when we look through the rearview mirror is the emergence of FinTechs, the emergence of competition, the emergence of collaboration. I just picked up the end of the previous discussion, and it's very clear that FinTech has been a tremendous innovator for payments and financial services more broadly, but also is clearly bringing some competition and challenging the status quo. So the transformation has been, as I say, has been very dramatic, but I think it's been fueled by customer, regulation, investment in technology and FinTechs.
Another little heard of development happened this year, and that was my mum actually sent me a digital payment rather than sending me a cheque. And I can't overestimate how big a thing that is, just in terms of permutation of people adopting digital banking. But let's look forward. Next 5 years or so, what do you see as the key drivers for growth? What are going to be those key levers?
Obviously, looking forward is more difficult than looking back, Neil. And I don't want to be too much of a hostage to fortune here this morning, but again, probably touch on 2 or 3 things. Instant payments. We have seen the proliferation of real-time instant payments across the globe. Capgemini, we recently published our World Payments Report, and it identified in 80 plus markets we now have instant or real-time payments, and that's continuing to grow. And I think that is that's a key. It's a key enabler in terms of innovation, but also it's one of the key drivers that we'll see that colours the future of payments going forward. The second aspect I would touch upon, Neil, is open finance. And again, regulation sort of plays a key part here, whether it be the PSD3 regulation that's approaching, FIDA, PSR. I think this is driving the opportunity for us to further have access to payments-related data, further access to customer preferences, to drive personalization, and again, drive innovation. So I think probably instant payments and the growth in terms of open finance both represent key opportunities. I think the third thing I would touch upon that enables probably everything in the context of innovation going forward is data. And again, it's a little bit of a kind of a motherhood and apple pie comment to make, but the banks have traditionally been very data rich, but not necessarily data centric. And we have seen the move towards investment in terms of data. How can the banks take advantage of this asset they have? And ISO 2022, another development that we've seen over the course of the last number of years, Neil, which I think will colour the future going forward. So I think if we're looking at this from a half-full perspective, the opportunity to leverage real-time instant payments, the opportunity to leverage open banking and some of the use cases that will bring, and then how can we leverage the increased richness of the data, the context that ISO 2022 gives us. And of course, it would be no conversation this morning without talking about Gen AI. And I think ISO not only gives us that standardization, but it gives us the platform to build Gen AI and large language model type propositions on top of that. So lots to think about.
And also, you presented me with about 6 different points there to ask follow-up questions on, so you're definitely keeping me on my toes. Let's stick with data for a second. You said, I think the quote was, data rich, not data centric. There's the expression that data is the new oil, it's the new gold, it's because it's so valuable. How much of a role do you feel FinTechs have in realising the potential of that data, particularly for the big banks?
I think the FinTechs have a key opportunity there, Neil. We've seen opportunities of data enrichment, where if you look at Tink as an example, I think they have the ability to leverage something like 10 billion transactions on a daily basis to enrich the data that they can provide through their collaborations and their partnerships. I think with our increased propensity to share our data as well, I think that represents an opportunity to bring personalization and really giving us the information, the products or the services we require at the appropriate point in time, the appropriate need, but also very much making it personalized to your requirements or mine. So data will be key going forward, and as I say, I think that's why we're seeing such an investment in technology and strategy to enable that.
Now, I think your first point to the previous question, if I remember correctly, was about instant payments. Let's talk about adoption. What are some of the factors for you that impact instant payment adoption and growth going forward?
I think here, again, Neil, we would look at some of the customer and some of the geographic differences. So if you look at instant payments, I think some data I saw recently suggested that something like in 2022, something like 13% of all non-cash transactions was executed via instant payments. When we roll the clock forward a couple of years to 2028, we expect that to be something like 22% globally. So we're seeing kind of incremental growth in terms of the adoption of instant payments. But also we're seeing differences by geography and differences by customer. I think if you look at the geographic lens, there's particular countries, I think I would put the US in this category, Neil, I'd potentially put France in this category, where they're very heavily predominated by cards. And from a consumer and a business perspective, card payments is the primary. Whereas you look at an environment like the Netherlands or Spain, where the advent of instant real-time payments has progressed much more quickly. There's a much stronger appetite, and the advent of account-to-account payments, or pay by bank as we refer to it in North America. But account-to-account payments, a good example of that in Spain is the Bizum app, and it's become ubiquitous, for payment across all different types of kind of merchants, different types of vendors. So I think first of all I would think about the unique differences by country. I think secondly I would look at how we can enable instant payments. And thirdly, I think we need to look at things like security and trust. Because again, in a financial services context, security is incredibly important. And the verification of payee is a really important step for us to make instant payments. Being very clear as a consumer, as a business, you know exactly who you're paying. And I think at the moment that's somewhat fragmented. And I think we'll probably see a little bit of a standardization in terms of verification of payments, which will hopefully enable a further explosion in terms of instant payments. Because if you look at countries like India, where they've deployed their UPI interface, if you look at Brazil, where they've deployed PIX, there's very clearly national appetite to also move away from traditional forms of payment and obviously promote instant and real-time payments.
Yeah, as you said, there is an explosion on the way and a lot on the standardisation as well. You were mentioning about open finance in your answer a moment ago. For you, how does open finance help in boosting the adoption of instant payments?
Well, I think open finance, has the opportunity for us to build some additional use cases, Neil, and I think there's clear opportunities in the likes of bill payments, in the likes of peer-to-peer payments, and I think cross-border transactions. So first of all, I think we see potential use cases and demand on that basis. I think the second thing I would say about open finance is the opportunity for account-to-account payments as well. And again, that's something that we've seen as a significant growth. I think if you look here in the UK, we see something like 15% year-on-year growth in terms of the number of account-to-account payments. I think there's still some question marks around some of the fraud element, and I think as opposed to the card networks where disputes and frauds and how you handle that scenario, it's well understood. I think with account-to-account payments, I think we still have to address elements of that, and it's interesting to see that Visa next year are launching their Visa account-to-account proposition in 2025, which is building on their network and building on some of their capability, but bringing that account-to-account functionality. So I think there's a strong appetite, and again, just quoting some of the analysis we did most recently in our World Payments Report, I think bank executives who we surveyed, over 200 of them actually, I think they all saw open finance as a key opportunity in the customer-facing world, but also from not just from a consumer but from a business point of view. But it was also clear, Neil, that very few of the banks had really made progress against that particular agenda. So again, as I look forward, as an opportunity for us as an industry, how can we take advantage of that instant payments infrastructure? How can we take advantage of the investment that's been made to date, but also realize some of those open finance use cases? Personal financial management, for example. PFM is an area that, again, we've seen a significant explosion and growth in recently. I think in a world where we've had a high inflation, where we've had an economic challenge. I think personal financial management is seen as an added value that the banks can bring to their customers through open finance. And I think all the big banks, whether it be HSBC, NatWest across the road, Lloyds Banking Group, are all using open finance to provide PFM type functionality.
One more question for me before I turn to the room, and I'm not sure if you can see my notes from here, but you've led me on perfectly to where I want to wrap things with you, and that's about readiness and how ready and prepared you feel the banks and the big payment firms are for this instant and open future, because the future and the speed of progression is remarkable at times. How ready do you feel they are?
Well, I think fundamentally the banks recognise the opportunity. And I think that's the key point I would make, But I think when we looked at it, probably only about 17% of them are actively building use cases and propositions that combine instant and open finance. So I think it's definitely in the plans, but the execution is limited. I think we should look at the fintech world, Neil, with the innovation that brings. We've mentioned organizations like Tink. We've mentioned some of the infrastructure, UPI and PIX. I think we need to look at how can we embed some of those fintech models into the broader kind of financial services and payments ecosystem to create value for our customers. And I think that's a key opportunity. And I think finally, the banks will continue to invest, not only responding to the regulatory agenda, but also building out, creating new value for their customers. And the level of technology investment we've seen over the last 10 years, certainly for those of us who operate in a services world, I think the future suggests that level of investment will continue, and I think that represents opportunity for us all.
Right, so let's go to some questions. We've got some from the virtual audience joining us online. If you are sending questions in, do say who you are and where you're contacting us from, unless you're all called anonymous. I wouldn't want to judge. So this is a question from Anonymous. Regulatory frameworks restrict introduction of new payment systems, imposing cumbersome reporting obligations that can slow innovation. Do you see change coming?
So I probably have a slightly different take on the impact of regulation. Undoubtedly there is a kind of a compliance aspect. Undoubtedly there's increased governance and increased control and overhead. And you look at something like ISO 2022. That's a significant investment across the industry. But I suppose my take is a little bit, our mindset has to be, how do we build on that investment? So not just in terms of being compliant, and many organizations, compliance is the benchmark and the target, but how do we create value through the additional standardization, the additional context, the additional information we have? So I think regulation, is a feature of our industry. I don't think any of us believe that that's going to change. I think we're attempting to ensure that regulation is designed and implemented in a way that has the customer and the organization in mind. But I think if we view regulation as a burden rather than necessarily an opportunity for us to create value from, I think we're in danger of missing out.
Thank you. Any questions from the room? We do have more from the virtual audience, but we have one very keen on the far side.
Hi, I'm Jane from IBM.
Hi, Jane.
I read an interesting article in The Economist yesterday around the BRIC countries coming together to discuss how they can bring together an instant payment solution to compete against the Western world, not based on the dollar. This is going to be a huge impact if they manage that in any significant way. Have you guys had a chance to think about this? What could be, or maybe not, is a threat to the overarching open system that we're offering?
Jane, I think it's a very, very valid point. And we touched upon we touched upon 80 plus markets having deployed instant and real-time payments. And I think it's the interconnectivity and the interoperability between those markets that really creates the opportunity and the value for us all. If you look at the BRIC countries, I've mentioned UPI in India, I've mentioned PIX in Brazil. They've been very successful in terms of building their own infrastructure and creating value on that basis. So I think undoubtedly they represent a kind of a competitive threat. But again, I think I would come back to the similar answer to the one I gave Neil with regard to regulation. I think we've got to view competition as a positive thing, and I think it will continue to drive innovation. We've seen it with innovation in payments technology in Asia, for example. I think the Asian and Singaporean market effectively have driven payments acceptance using QR codes, which I think has forced the rest of us to kind of think about how we can keep pace, Jane, but also how we can innovate. So undoubtedly the BRICS will represent competition, but I think again, let's see if we can all sort of raise the bar on the back of that. I hope that answers your question.
Okay, thank you for that question, Jane. And we now have a red light flashing at us, which is telling us we need to wrap things up on this session. So thank you very much for your questions. Thank you to the virtual audience for your questions. And a big thank you to Gareth Wilson, Executive Vice President at Capgemini.
Yes, thanks very much.